Well, I'd like to introduce you to ECS Capital Partners, a venture capital fund, unlike most with which you are familiar. ECS Capital Partners is designed to revolutionize access to and results from the early stage asset class. Now, what is this early stage asset class and why is it so unique? Well, it's unique for several reasons. First of all the published statistics show an average rate of return of 25 to 30% per year. This includes all of the high risks, which we all understand for this asset class, but very few, if any, asset classes have a comparable high rate of return. Secondly, this rate of return in this asset class is minimally correlated with other major asset classes. Value is created no matter if the overall economy is going up or down or sideways. Finally, the early stage asset class is the true engine of economic development and human betterment. New technologies and services and products and new wealth and new jobs and new tax returns all come primarily from young startup companies that turn into major unicorns and workhorses. However, even in spite of these benefits, this asset class has to be treated differently from most others. Because these are startups, they don't have historical numbers and data. We're dealing with potentials and probabilities here. And they probably don't even have product market fit and often even any starting revenues. So we have to approach this in a different way from most other asset classes. Now, in the overall landscape, how does this early stage asset class operate? It has a number of players. First of all, we have the entrepreneurs who start and run innovative new companies. They always complain that it's difficult to find adequate financial support and other support like mentoring, advising, etc. The governments and communities and societies that these startups live in don't see the optimal progress and returns given the way the system is currently operating. And finally, we, the investors, have problems with access and efficiency and structure of this amorphous, hard to define early stage asset class. Most investors don't do it well at all. And I'd like to talk about this at more length. That average return number that we have from all of the historical studies of 25 to 30% is an average. And because the left side of the curve is limited by 0 and the right side of the curve is essentially infinite, many more players experience suboptimal, sub-average results, but a few, the minority who are really good, get even better returns. So let's talk about the investors a bit. These investors come in two broad categories. First of all, we have those that don't participate in this asset class. And it's understood that fewer than 1 in 10 accredited investors or even family offices participate here. And so they don't get the potential returns. Society and the entrepreneurs are deprived of the benefits. But why should everybody have to participate in it? We all know professions, piloting planes, doing car maintenance, etc., legal work, medical work, where everybody doesn't have to do it for themselves. We hire professionals. Investing, particularly in this asset class, is no different. And then we have those people that do participate in this class actively, angels, angel groups, some high net worths and some family offices. The way they do it, however, is still suboptimal. They often operate by whatever applies to them in a particular geography or industry focus. The early investors lack sufficient finances to support deals all the way through. The later investors lack expertise or resources to really evaluate these young companies. And so nobody does it optimally. And this is where ECS Capital Partners comes in. We have a dual investment thesis of aggressive, superior financial return through and with positive impact on the world. Now, the way we do this is we generate a diversified portfolio of multi-stage deep tech impact investment companies for every investor. And that includes both the smallest and the largest. We do this with a formal asset allocation strategy, which allows us to invest in multiple stages. We make many initial small investments, and a subset of those receive second or third round investments as they are prospering. This leads to, as close as one can come, to an intelligent index or composite of this very unusual and rewarding asset class. And we do this broadly through high-level integration of all the players, which unfortunately today operate mostly in silos. So we have a wonderful, extensive network. We're very active, and we know our limitations. We recognize that we have to be humble, even while working very hard. So I want to emphasize the partnership and the integration that is a hallmark of ECS Capital Partners. In this spectrum of players in this early stage space, we start with the organized angel groups and smaller funds. These are the critical first line of discovery for the most promising startups. Of 500,000 companies which start up in the United States each year, about 1% of those, roughly 5,000, receive funding from outside angels and angel groups. The other end of the spectrum, we have family offices and high net worth individuals who have lots of money, but don't have the contacts and the established processes to deal with this amorphous early stage asset class. Venture capitalists are somewhat in between, which have some characteristics like either of the extremes. I like to use the analogy here that the angels are the parties that discover the promising ants and crickets that are just emerging. The high net worth individuals and family offices with the most money and some venture capitalists are like the eagles that soar over the landscape. They can see a tasty looking rabbit or sheep and swoop in for the meal, but they can't see the crickets and the ants that the angels are identifying and nurturing. Our job at ECS, our approach, is to work with all of these participants to use the deal discovery mechanisms and channels, starting with the angel groups, and combining that with the financial resources of the larger players, family offices and high net worth individuals, to allow better outcomes for everybody. So how are we different from a typical venture capital fund? Well, we're highly individualized. There are many ways for every investor to develop their unique account and holdings with us. We have an very investor favorable return waterfall. We're an evergreen fund, so it's easy to routinely or frequently add more money or take out money at many opportunities. We have super or co-investment opportunities. We conceptualize the early stage asset class as an entity and a class in itself. And so we invest in lots of private companies, but even some publicly held companies qualify as early pre-revenue, pre-product market fit opportunities. We have the experience and resources to do this well, and we are allowed to generally solicit. So what are the advantages that we have that allow us to operate in this way? First of all, I've already referred to our deal flow diversity. We have at least a dozen channels by which we find the best of the best deals. That 1% which are already funded in the US economy are our starting point, and we further look for the most promising 1% of those. And that takes an unmatched search effort, which we put out. We collaborate with all of the other players in the industry in a way which is virtually unmatched. Now, I'm going to tell you in a moment, I have a technical background, scientific and technical, which allows an independent judgment on these scientific and technical bases. We have a staged investment strategy so that we invest in many promising candidates, all carefully selected, and then go with a sense of humility. We go further and deeper with the few that warrant that. And we don't only focus on the 1 out of 10 unicorn home runs that so many venture capitalists seek. Venture capitalists, if they get 1 or 2 unicorn home runs, they're willing to write off 7 or 8 or 9 failures. We have an opposite approach. We seek and have some unicorn successes, but we have many more base hits, so that rather than writing off 8 out of 10, we write off 2 out of 10. And all of this is with an absolute commitment to returns for our investors. So a last word about me, the founder and general partner of this fund. I'm Harvard educated in science, have a University of Cincinnati MBA in management, and had some foundational further education at the Santa Fe Institute. Most of my adult career was in technical and scientific research and teaching and practice, first in IT and artificial intelligence, and then in biomedicine, immunology, genetics, etc. And so I have a virtually worldwide network of collaborators and resources. After this academic career, I went into the investment arena. So for about 20 years, I've been investing in early stage companies. I've invested in about 100, and I've had gains from total washout to 30x returns. A brief timeline here. In 1965, I started my first IT business as an operator, hardware and software and programming. In 1976, I earned my PhD in immunology from Harvard, started my 40-year career in academia. In 1999, during an academic sabbatical at the Santa Fe Institute, I met my first angel investor, was totally fascinated, began to make early stage investments. And by 2003, I had started an angel group myself. In 2004, I was one of the founding members of the Angel Capital Association, our industry standard organization. By 2010, having made many investments, I decided it was time to change full-time from academia to the investing world. So I retired from university. And now we are launching ECS Capital Partners. In this interval, this last decade, I have invested in more than 40 early stage companies, 41 to be precise today. Of those 40 new companies since I retired from academia, 12 have exited. And of those 12 exits, 2 were goose eggs, had some 1x returns, 2x returns, 3x returns, 5, 6, 8, 10, and a 30xer. So my average of those 12 returns over this set of invested companies is 5.5x, which is not too shabby. To close, I want to leave you with this introduction to ECS Capital Partners. If putting $1 million to work, for example, moves the needle for you by turning that million into 10 million over 10 years, you should take a more serious look at us. Additionally, if you're interested in the values and the impact of your investing activity, every single company that we invest in is a full-fledged positive impact investment. You can be very happy and satisfied with the firms that you are supporting. Secondly, ECS Capital Partners itself is innovative and impactful, improving the entire early stage landscape. Another way of having an impact. So if you would support a symphony orchestra, a museum, low-income housing, etc., with no return to yourself, participating in ECS Capital Partners allows a similar contribution to society with a marked outstanding financial return. So I thank you for your attention. Would be happy to talk afterwards.